Good afternoon. This is David Young with Housing Action Illinois. It's 2 o'clock and welcome to the Community Revitalization Challenge launch webinar. We will give people just a moment to get on the call and then we'll get started. Thank you. Again, this is David Young with Housing Action Illinois. Thank you for joining the Community Revitalization Challenge launch webinar, and we will get started. I'd like to start first with the agenda and housekeeping. We're going to start by giving you a CRC outline and timeline. We will also do a CRA, or Community Reinvestment Act, refresher with Paul Ginger from the Office of the Comptroller of the Currency. If you have any questions, we will take questions after Paul's presentation. There will be a chat box where you can ask your questions, and then we will read them during that time. We will also publish a frequently asked questions list on the CRC webpage, so look for that after the call. We will also, everything that I talk about today, you will find on the CRC webpage, so make sure to look at that. You will also notice that there is on the page that there is a handout, a PDF document that you can open. So if you would take a moment to open that, that would be helpful. And again, if you're not able to open that now, you will be able to find that on the CRC webpage. So again, we are very excited to bring this Community Revitalization Challenge webinar to you. We are looking forward to launching this initiative. We want to, first of all, thank the Community Builders Network of Metro St. Louis that has something similar, the capacity building ladder, and they were gracious enough to allow us to build off of that to develop the Community Revitalization Challenge. Most of you are familiar with Housing Action Illinois, but just a brief intro or update. We are a membership-based nonprofit organization, and we have about 170 members across the state of Illinois, and we provide capacity building, public education and organizing, public advocacy to our members and partners across the state. Our goal is to increase the availability of affordable, safe housing and housing for special needs folks. We have, in addition to our traditional work, we have our HUD Housing Counseling Intermediary, which provides HUD housing counseling funds to over 30 organizations in 4 different states. And we also have our AmeriCorps Vista network, which provides Vista volunteers throughout our network across the state. So, before we get started, I'd like to thank the CRC sponsors, Associated Bank, Midland States Bank, and U.S. Bank, and the members of the CRC Steering Committee, Amelia Vega with U.S. Bank, Tiffany O'Day with Associated Bank, Nicole Clements with PNC Bank, James Gilliam with Fifth Third Bank, Cornell Lurie with First Midwest Bank, David Noble with Midland States Bank, and Bob Mueller, who is actually just recently retired from Hometown Community Banks, but Hometown Community Banks decided to remain a member of the steering committee. So, again, Everything that I talk about today, you will be able to find on the Community Revitalization Challenge website. But the purpose of the challenge, of the Community Revitalization Challenge, is to increase the capacity of community organizations to build sustainable partnerships between organizations and banks, support the development of investment-ready projects, and create a reliable funding stream. First and foremost, although that there are dollars that will be awarded to successful projects, this first and foremost is a capacity building initiative. Our goal is to develop the long-term capacity of our members and partners in order to create more economic development and community development opportunities throughout our state. So while there is seed money available, the real prize through the Community Revitalization Challenge is the knowledge that your organizations will learn and the capacity that you will be able to build for long-term success. So I'd like to talk a little bit about the process. So as you can see from the slide, you will prepare or develop a project idea. It can be an economic or community-oriented idea, but it is not limited to just bricks and sticks. So if you have an idea such as developing low to moderate income housing, that is an exciting idea and we would like to see that application. But even if you are looking for other things that you could do to improve your community, we'd like to see those applications as well. So maybe an example is that in one of the communities, someone wants to develop a community farm stand. We'd love to see that application. That'll be important to see. You will submit a registration and initial project proposal to Housing Action by August 5th. I'm sorry, by October 5th. I guess I was thinking about August 5th is my birthday, so forgive me. It's October 5th. Submit a registration and initial project proposal to Housing Action by October 5th. Housing Action will review submissions to determine which should move forward to the match round in October. Applications will be confidential, but once we receive the applications, they will be shared with our banking partners before the roundtable. Organizations will present their proposals in geographic roundtables at the 2018 Housing Matters Conference, and that will take place on October 26th. And as I said, we will use geographic roundtables so that organizations will be competing in their specific areas. So there could be a geographic area for Northwest Illinois, for Southern Illinois, for Central Illinois, as well as for Metro Chicago. Once organizations have made their proposal pitches in October, then the banks will select some of those proposals in order to work with them to help them to refine and develop their projects. Once a project has been selected by a bank, the winning organization should remember that they need to drive the process. So that means that they will work with the bank to make sure that they're getting the information that they need in order to refine their project, to move it forward, and keep going. These same organizations will also provide reports to Housing Action as to the status of the projects as we move forward. Organizations will then, once they have completed their project proposals with their banking partners, will showcase these at the October 2019 Housing Matters Conference. And again, these will be presented before a panel, and winning organizations will then receive seed money to move their projects towards reality. So we would expect that because there is time between the October 28 and 29 conferences, that there might be some organizations that have been able to move their projects forward faster. And we encourage you to be able to go ahead and do that. By working with the banks, you should be in a position where you have the ability to do that. If you want to do that, you're welcome to do that. It does not exclude you from participating in the October 2019 roundtable. I want to talk just a moment about the nonprofit roles and responsibilities. In Phase 1, at least one representative must attend the CRC launch webinar. You must register for the CRC roundtables and submit 2 to 4 potentially Community Reinvestment Act eligible project ideas based on the given timeline or the given template for Housing Action Illinois to review. And again, I remind you that if you have any questions about what we're talking about today, that you can ask those questions in the chat box, and we will answer those questions during the question and answer period after Paul Ginger's CRA presentation. In Phase 2 of the nonprofit roles and responsibilities, you would attend the roundtables to pitch project ideas to banking representatives. If projects are accepted by a financial institution, submit a joint commitment, work plan, and project idea for Housing Action Illinois to review. 3, collaborate with partner bank to develop a project proposal and send proof of dialogue to Housing Action Illinois. Submit one comprehensive proposal formatted according to given guidelines to Housing Action Illinois for feedback and approval. Prepare and administer one proposal presentation for potential funders. If selected for seed funding, submit one updated project agreement to Housing Action Illinois. And 5, finally, implement project agreement over proposed time frame while completing all progress reports, maintaining a good relationship with financial partner, and providing updates to Housing Action Illinois. I'd like to go to the next slide where we can discuss the Community Revitalization Challenge timeline. In September, we today have the launch webinar where we officially launch the Community Revitalization Challenge. Organizations receive feedback and assistance in preparing for CRC roundtables. So we will provide the frequently asked questions and additional information on the CRC website. And you also will be able to reach us via our CRC email address. In October, groups that wish to participate and submit a proposal must register and complete its initial project presentation form by October 5th. And then you must attend the CRC Regional Networking Roundtables on October 26th. In November, Housing Action Illinois will match banks and community organizations. In December, Housing Action Illinois will continue to support participants in developing their joint commitment and project development work plan, and that is also in conjunction with the partnering banks. In January, bank and nonprofit partners will submit a joint commitment by January 1st. Nonprofits will collaborate with financial institutions to develop a comprehensive project proposal. And then in October 2019, nonprofits will present their proposals to a panel of potential funders during the project showcase. And from that showcase, regional winners will be selected. We will now turn this presentation over to Paul Ginger, who is with the Office of the Comptroller of the Currency, and he is going to give a refresher on the Community Reinvestment Act. Thank you, Paul. And right now we're bringing up Paul's presentation. Are you with us, Paul?
I'm here, and I hope you can see my slides.
We can see your slides, so thank you for being available to make the presentation, and I will turn this over to you.
All right, well, thank you for inviting me to make it. Good afternoon, everyone. Before I jump into my slides on CRA, I want to put CRA into the context of the business of banking by describing a variety of motives that bankers have for developing partnerships with nonprofits. Bankers, in my experience, generally see the close connection between the health of their banks and the communities they serve, and they're motivated by that close connection to seek partners that will help to ensure that their communities are economically vibrant. Bankers are motivated by a number of more narrow concerns, too. Increasing their market share, for instance, their share of loans or of deposits or of customers for their other services. Bankers also are motivated by their need for income. They need interest on loans, and they need fees from services to exceed their expenses in order for their bank to remain viable in the long run. A significant portion of the banking business also entails the management of risk. So bankers are motivated by a desire to mitigate the risk of losses on loans, for example. So partnerships or programs that can increase the likelihood that the bank's loans will be repaid over time often are of great interest to them. Bankers are also motivated to uphold their reputations. There's little that's more important to bankers than their reputation in the community as a business that deals fairly with all customers. And finally, very much related to reputation, bankers are motivated by CRA. They always want to do well on their next CRA exam. I'm taking this time to review the range of bankers' motives because I believe that you'll be more successful in developing a partnership with a bank if you engage them on several of these motives simultaneously, rather than relying on CRA alone. When CRA was passed in 1977, Congress said in the statute that banks have an obligation to meet the credit needs of the communities they're licensed to serve, including low and moderate income neighborhoods, consistent with safety and soundness. This dual mandate, make sure that you meet your local credit needs and stay within the bounds of safety and soundness, carves out a distinctive space that bankers sometimes can fill only by partnering with nonprofits and government agencies. When I'm talking with bankers, I often characterize CRA as a tap on their shoulder, a reminder that while it's fine to do business in the wealthier parts of their communities, CRA directs them to make sure to look in lower income areas for business opportunities too. I also tell bankers that if they perceive obstacles to taking advantage of those opportunities, for instance, if prospective borrowers need to repair their personal credit history or if they need to accumulate a down payment, then the bank should find partners that can help to overcome those obstacles. CRA is enforced by 3 federal agencies: the Federal Deposit Insurance Corporation, the agency that I work for, the comptroller of the currency, and the Federal Reserve Banks, which in Illinois means the St. Louis Fed for banks in the southern half of the state, and the Chicago Fed for banks in the northern half. CRA assigns a number of duties to us federal regulators. One of those duties is to rate each bank that we supervise on how well it's meeting the credit needs of its community, including low and moderate income areas. CRA also tells us to use the 4 rating categories on this slide: outstanding, satisfactory, needs to improve, and substantial noncompliance, and to disclose to the public how we have rated each bank. And Congress requires us to issue a report containing the facts and data underlying our ratings. Our reports, which are called CRA Performance Evaluations, or CRAPEs for short, are available at every bank and online for you to read. In addition to our ratings, CRAPEs contain background information on the bank, such as its business focus and information on the communities the bank serves. It's information that you may find helpful before you try to develop a partnership with the bank. I have a couple of links at the end of my presentation that will help you locate these CRA PEs online. These public ratings are one of the enforcement mechanisms in CRA. Bankers want to be seen as performing at least satisfactory overall, and some shoot for outstanding ratings. It's the rare banker that's okay with being rated publicly as needs to improve. In addition to hurting a bank's reputation, a needs to improve CRA rating carries other consequences as well. When banks apply to us for permission to open a branch or to merge with another bank, we take into account the bank's CRA rating before granting that permission. A needs to improve CRA rating can prevent a bank from expanding its business. With this slide, I want to call your attention to two facts. The first is that increasing bank size is accompanied by increasing CRA requirements. Small banks, the first bullet point, with total assets of less than $313 million, have one CRA test. We evaluate their lending record. Roughly 70% of all banks fall into this small banks category. Intermediate small banks, or ISBs, the second bullet point, have total assets between $313 million and just about $1.3 billion. They have two tests, lending and community development. About 20 to 25% of all banks are in this category. And large banks, the third bullet point, with total assets of more than $1.3 billion, have three CRA tests, lending, investments, and services. And to just give you a sense of the different bank sizes, small banks are truly smaller community banks. For example, Waterman Bank in DeKalb County has $35 million in assets, and Rochester State Bank in Sangamon County has $95 million, and both of those are small banks for CRA. Intermediate small banks are community banks too, but they're somewhat larger. First Robinson Savings Bank in Southern Illinois with $322 million in assets, and Albany Bank in Chicago with $600 million, both are ISBs. And so is Illinois National Bank in Springfield, which has $988 million in assets. The large bank category includes a very broad range of banks. For example, Midland States Bank with $4 billion in assets is a large bank for CRA, and so is Chase Bank with $2 trillion in assets. So there's quite a range that gets included, especially in that large bank category. A second fact that I want to call your attention to on this slide is that all three types of banks, regardless of their size, are evaluated on their lending activity. And in fact, lending performance is the most important part of any CRA evaluation. So to the extent that your programs can help banks increase their lending, especially to low and moderate income borrowers, or in low and moderate income areas, or to small businesses and farms, you can provide valuable help to banks in meeting their CRA obligations. And I should mention that although I'm referring to home mortgages and small businesses and small farm loans, which are the loan types we generally analyze for CRA, a bank's lending test also could include consumer loans, such as car loans, but only if the bank asks us to review them as part of the exam and if they collect certain required data elements for those loans, things that we require them to report to us so that we can analyze them properly. So we conduct our CRA exams every 3 to 5 years, and we encourage bankers to monitor their performance between exams so they're not caught off guard when we schedule their next one. Bankers will have three main concerns when they're monitoring their performance. First, they'll measure their lending activity over time by asking themselves, is our bank actively lending? What number and dollar volume of loans are we originating? They'll also analyze the geography of their lending. That is, are we lending in our assessment area? And are we lending in low and moderate income areas in our assessment area? And they'll also analyze the variety of their borrowers. Are we lending to borrowers of different incomes, and to businesses or farms of different sizes in our assessment area. I won't go into all the details, but I will say that our expectations essentially are that a bank will make more than 50% of its loans in its assessment area, and that its loans will be distributed roughly in proportion to the incidence of low and moderate income areas, low and moderate income residents, and small businesses and farms in their assessment areas. And I would imagine that you've noticed that I've been using kind of an unusual term all along here on this slide, assessment area. It's the technical term that we bank examiners give to what essentially is the bank's market. In more formal terms, it's the geographic area where the bank has its main office, its branches, and its deposit-taking ATMs. To the extent you can help bankers answer each of the questions on this slide in the affirmative, you can help them meet their CRA obligations. Now, I just described the three main concerns of bankers when they monitor their lending for CRA. That is activity, geography, and variety. And I use those terms, and I'm going to repeat them again, activity, geography, and variety. I use them as a handy way for you to remember the banker's main concerns. But my three-word scheme combines a couple of our formal examination categories. I'm not going to go into all of these, but I will just suffice it to say that this slide lists the formal evaluation categories for the small bank lending test, which is 100% of their CRA rating. For intermediate small banks, we use the same lending test that I just showed you for small banks. And we're still concerned with the three categories, activity, variety, and geography. ISBs must be rated satisfactory on their lending test in order to be rated satisfactory overall. But in addition, intermediate small banks are subject to a community development test, under which we look at the bank's community development loans, its community development investments, and its community development services. Just as with the lending test, an intermediate small bank must be rated satisfactory on its community development test in order to be rated satisfactory overall. The lending test for large banks essentially is very similar to the lending test that we've already seen twice. We're still concerned with activity, geography, and variety, but we've added two other items for large banks. One is the community development loans category, and then we added a qualitative analysis category under which we ask, to what degree does the bank use innovative and flexible lending practices? This is where a bank can receive consideration for a loan program tailored to particular local needs, which often is done in conjunction with a community organization. Lending, as you can see on this slide, is 50% of a large bank's overall rating. And then at large banks, the other half of their CRA rating hinges on the investment test and the service test, 25% for each of them. Under these tests, we review the bank's community development investments and their community development services. So while lending, as I said before, is important to all three categories of banks, the two larger categories, large banks and ISBs, they have to show us that they've been engaged in community development activities to be rated satisfactory overall. In addition, small banks that are lending at a satisfactory level can boost their CRA rating to outstanding by showing us that they've been involved in community development work. So community development is an important part of CRA too, just like lending. Now, I'm sure that you're wondering by now about that term community development that I've just used repeatedly. What do we regulators mean by community development? We mean the four categories that I've shown in bold-faced type on this slide. First, affordable housing. Affordable to low and moderate income persons. This could be single family or multifamily, or it could be owner-occupied or rental housing. Second, community services, by which we mean a variety of social services. That phrase, targeted primarily to low and moderate income persons, means that more than 50% of the beneficiaries of the services are low or moderate income. third, economic development. Under CRA, that means activities that help small businesses and small farms obtain financing that creates jobs. This often means helping with business planning as well as financing. In addition, you should know that economic development includes support for job training programs too. The fourth category, revitalization and stabilization, denotes activities that retain existing residents and businesses in certain geographic areas and that attract new residents and businesses to those same places. During a CRA exam, we bank examiners will consider a bank's loans, investments, and services that fit into each of these categories. Among the activities that fit into the category of community development investments are a bank's donations that benefit primarily low and moderate income persons or areas. I've listed on this slide a few examples that I hope will elucidate the kinds of bank donations that receive CRA consideration. Some of them will be clearly related to the bank's lending business, support for housing counseling or for small business development, for instance. And some of them will be purely charitable, such as donations to food banks, homeless shelters, or for health care. This is not an exhaustive list, but it does show some of the more common types of donations that we consider for CRA. This slide lists a few more examples of CRA investments that banks often will show us. It includes transactions that look more like traditional investments, but that have a clear connection to community development and to the rest of the bank's business. Investments in CDFIs or in local loan pools or deposits in low-income credit unions, for example. And in addition, many banks will show us that they've made investments in low-income housing tax credits or new markets tax credits, or in small business investment companies too. We regulators think about community development services in terms of two categories. One category is services that the bank provides directly to consumers, such as the examples on this slide. Bankers often serve as teachers for programs that provide credit or home buyer counseling, and will consider that activity as long as the beneficiaries primarily are low or moderate income. Bankers also may provide a variety of deposit or lending services that are served primarily low or moderate income customers, such things as credit builder loans or responsible small dollar loans. A second category of community development services consists of services that bankers provide to nonprofits that primarily are serving low and moderate income communities, such as the examples on this slide. Every bank always shows us a list of their volunteer activities at CRA exam time. They may provide deposit accounts in conjunction with an IDA, an individual development accounts program, or they may serve on the board of directors or a fundraising committee for a nonprofit housing development organization, or they may provide other technical skills that they use on their job in the bank to help a nonprofit social services agency that serves primarily low and moderate income clients. And there what we would consider maybe an attorney that they lend to a nonprofit to develop some documents that it may need for its business. Or maybe a computer person that helps the nonprofit with their computer systems. I've listed on this slide 5 steps that you might take to develop a partnership with a bank. I'm not going to go into any detail as to what I believe is involved in any of these steps listed here, but I will refer you back to my list of bankers' motives on my first slide, and then I'll let you take your own steps to a productive partnership with your local bank. I just include these as, I guess, as a list of suggestions. I have 2 more items to cover, and then I'm going to stop talking. One is that my agency, the OCC, recently announced that we would like to modify our CRA regulation to better fit the banking business, which has changed considerably since CRA was passed 41 years ago. We recently published a list of questions for the banking industry, and for interested members of the public to give us feedback on how we can update CRA. I strongly encourage you, individually or collectively, to provide us with your comments. And I put on this slide the link to our website that contains the list of questions and our background on that. And once it's published in the Federal Register, which may be another week or two from now, at that time there will be a 75-day comment period for you to submit your comments. So if you want to submit comments now, you should feel free. You'll find everything that you need on that website that I've got there. Last thing I have to cover are a couple of links here. These are the links that I mentioned earlier that will help you find the CRA public evaluations that we write. And you can find more detailed information on CRA from these sites as well. And then last, I'm going to mention that the Federal Reserve Board over the last couple of years put on YouTube 4 videos that discuss CRA and that I recommend if you need yet another refresher on CRA, if the job I've done isn't sufficient. Altogether, you'd need about 30 minutes to watch these. And then last, I've got my contact information. And with that, I'm going to turn it back to you, David, and I'll stay online to answer questions.
Thank you, Paul. I appreciate it. This was a very informative presentation, and I especially appreciate you also providing additional links for people to access additional information. So thank you again. So we have received a couple of questions, and I am going to go over those questions and give you answers, and then I will also do a brief review of the webinar before we conclude today. So the first question that we received was, will this PowerPoint be emailed? And this PowerPoint actually will be added to the CRC webpage at Housing Action Illinois, so you will be able to access the PowerPoint and all associated documents on our webpage. I was asked, can you please clarify the dates again? Sure. So the first thing that you have to know is that your application to participate and your project proposals are due October 5th. So your application and the project proposal, which does not have to be a fully fleshed proposal, it should be an idea. So again, if you have something that you've been thinking about and it's an idea that you would like to explore, this is the opportunity to do that. You would submit that proposal. It will be vetted by Housing Action Illinois, and if it passes that smell test, then it will be forwarded to the CRC Banking Committee for the roundtables in October. If you complete the roundtable and your project is selected, then you are expected to have your bank and nonprofit partners will submit a joint commitment by January 1st of 2019. And then you will also, as the nonprofit, will be responsible for periodically checking in with Housing Action Illinois to provide status updates of your project. And then you will be ready in October of 2019 to do your final presentation at the 2019 Housing Action Illinois Conference, which will take place in October of 2019. The CRC, the Community Revitalization Challenge proposal application, will be added to the CRC webpage by tomorrow. We had some final review earlier today, so that will be added by tomorrow. So remember to go to the webpage for that. You can also find the project proposal sheet. You'll be able to find the PowerPoint presentation. We will also put Paul Ginger's CRA presentation on the web page. And as I had mentioned earlier in the call, we will do a frequently asked questions, and we will add that to the page. Can the organization submit more than one proposal? Our organization has a small business center as well as a housing program. Can we submit for both? And is it possible for both to be selected? So the first part of the question, yes, you may submit more than one proposal. And two, can you submit both? Yes, you may. And is it possible for both to be selected? It certainly is possible, but that is really going to depend on what type of proposal that you submit and whether that is appealing to the banking partners that you present to at the October 26th roundtable. Also, make sure that you take a look at the checklist, which you can find on the CRC webpage. And also look at the handout that we provided to you that is linked on on your screen, which has more information, including that checklist. So you can find that checklist as a PDF document on your GoToWebinar screen, and you also can find that on our CRC webpage. Do you have to be a member of Housing Action Illinois to participate in the challenge? Our preference is that you will be a member of Housing Action Illinois to participate in the challenge. Again, this information is also included on the checklist and the application. And that's all the questions that we have. So I'm just quickly going to remind you that this starts we have one more question. What is the minimum and maximum amount of investment funding request for a particular project? There is no minimum or maximum at this time. It is really up to you because you are not submitting in October, or at least in October 5th, you're not submitting a proposal that has all of your costs fixed or exactly how this is going to work. You are submitting an idea. You are submitting a plan, but it doesn't have to be fully developed at this point. So there is not a maximum or minimum amount of investment. I mean, if your project, for example, is selected by one of the banks as part of the roundtable, you will work with that bank over the next several months to determine what do you need investment-wise to make that project work. What sources will those dollars come from? How many different sources might you need to make that work? Is it going to require mezzanine financing where you've got several different funding sources coming together to make this possible? So again, we would like to keep this as open as possible in terms of October 5th. You want to present a good idea, and then let's build on that idea while also building the capacity of your organization. And then if you look at the GoToWebinar, you'll see you'll see a PDF for the checklist. So that's under the handouts. And then it will also, if it has not been added, it will be added by tomorrow to the CRC webpage. But again, the checklist is included with the handouts on the GoToWebinar screen that you should be able to see on your computer. So very quickly, this Community Revitalization Challenge is designed to help organizations to form partnerships with financial institutions for the purpose of increasing the capacity of nonprofit organizations, and developing initiatives that can be funded, which can improve the communities in which these organizations serve across the state of Illinois. You will submit your initial project proposals in October. If you are selected in the roundtable by a bank, then you will work for the next several months after that to refine that project and prepare it for presentation in October 2019. If your project is selected from there, there will be seed money available to the winners. But again, the primary focus of this is not the seed money, but building the capacity of our nonprofit organizations across the state and their ability to create projects that improve their communities, as well as provide a revenue stream for these organizations. So hopefully, with the skills and the knowledge base that organizations develop from this capacity revitalization challenge, that they will be able to do more initiatives like this, and from that generate revenue to keep their organizations going and to have sustainable growth in their communities. So we just have another question. If we partner collaboratively with another Housing Action Illinois member, can we submit a joint proposal or two separate ones? If you would prefer to work in a collaborative, my suggestion would be to submit a joint proposal. If on October 5th, after we've reviewed, we feel that this should be separated, we'll let you know. But if you are looking to do something in collaboration, our suggestion would be to submit a joint application. The project proposal template will be on the the CRC website tomorrow. And let's see, I believe that is all the questions that we have received. So again, we'd like to thank you for participating. We are going to conclude this call by, we're going to conclude the call by having some closing remarks from Nicole Clements from PNC Bank. Nicole is a member of the Board of Directors of Housing Action Illinois and is also part of the CRC Steering Committee. Nicole, are you with us?
I am. Can you hear me?
I can hear you just fine. So thank you for being available, for providing some closing remarks, and I'm going to turn it over to you.
Thank you, David, and thank you, Paul, for that great overview of CRA. Again, my name is Nicole Clements. I'm the Vice President of Community Development Banking for PNC, and I cover the Central Illinois and Metro East St. Louis markets. PNC is a large bank, so as far as Paul's presentation, we have to comply with the service loan and investment test of CRA, and we are very proud to have enjoyed an outstanding rating on our previous CRA exam, and hopefully we'll continue in that direction. On behalf of the participating financial institutions, we certainly welcome the opportunity to collaborate with you all and Housing Action Illinois through this unique opportunity of the CRG Challenge. We think that this approach to CRA will definitely help to facilitate new partnerships between banks and nonprofits. And while we recognize that some projects may not be able to immediately move forward, as David has indicated, we hope that this opens the door for continued collaboration that can advance the purpose of CRA. We all know that there is a high demand in our communities to support LMI populations. Therefore, if we can support projects through a combination of loans, services, and investments that are feasible in order to help move a project forward, we would like to explore that opportunity with you. So again, in conclusion, thank you for your participation today, and thank you to Housing Action Illinois for coordinating a regional approach to CRA. We look forward to working with you, and we certainly encourage your input and feedback and questions as we go through the process. So with that, I will turn it back over to David to close us out.
Thank you very much, Nicole. We appreciate your comments and look forward to your participation. Again, thank you all for participating in the Community Revitalization Challenge kickoff webinar. I would just like to remind that for organizations that wish to participate, as you know, one of the requirements is that you have listened to this webinar before submitting your proposal on October 5th. If you were not able to listen live, you will be able to listen to the webinar online, and it will be available on the CRC webpage as of tomorrow. Again, if you have any questions after this presentation, you can reach out to us via the CRC webpage. We thank you for participating. We are very excited to offer this opportunity, and we look forward to seeing your presentations and seeing the proposal presentations on October 26th. So start working on your proposals for October 5th. And again, we look forward to then seeing those presentations on October 26th. Thank you, and have a great afternoon.